Good afternoon, ladies and gentlemen. Thank you so much for taking the time to attend the press meet for Citius Infra Investment Trust. On behalf of Access Capital and the team of all book running lead managers, it is both a privilege and a pleasure to welcome all of you here today ahead of the opening of the initial public offering, the IPO of the InvIT, which is Citius TransNet Investment Trust. So we are honored to be joined today by Mr. Shri Kumar Chatra Sir, Managing Director, Infrastructure Funds of EAAA India Alternatives Limited, Mr. Bhavyang Oza, Whole-Time Director and Chief Investment Officer of ETML, which is EAAA Trans Infra Managers Limited, Ms. Sujaya Mogepadhyay, Head Capital Markets and Investor Relations for EAAA India Alternative Limited, and Mr. P. Padmanabhan, Chief Financial Officers of ETML. So, just to give a quick background of the Citius InvIT before we dive into the session. The Citius platform, through the Citius Infrastructure Investment Trust, offers a unique opportunity as a transport-focused InvIT backed by a financial sponsor, providing investors with a scaled, a mature, and a well-balanced platform. The platform is managed by EAAA Trans Infra Managers Limited, which is ETML, which is a wholly owned subsidiary of EAAA India Alternatives Limited, which forms part of the EAAA group, leading India alternate asset managers with an AUM of approximately INR 681.75 billion as of December 2025. The total portfolio of the InvIT, including ROFO assets, comprise 21 road assets across 12 different Indian states, representing approximately 5773.52, that is 5773.52 lane kilometers. This creates a balanced portfolio of annuity and toll, providing steady cash flow and recurring toll revenues. With an in-house operating team of approximately 350 employees and technology-backed O&M capabilities, Citius ensures holistic and reliable asset management outcomes throughout the life cycle of its assets. And as mentioned earlier, backed by EAAA Group sponsorship, transparent concession structures, and a portfolio of proven high-quality operating assets, the Citius platform is positioned to continue growing as a stable, scalable vehicle to deliver steady distribution and long-term value to its investors. Now, quickly going into the IPO details. The size of the IPO is 1105 crores, that's 1105 crores, with a lot size of 150 units. Anchor, which is 45%, is 497 crores. Main block, which is 30%, that's 332 crores, and non-institutional is 276 crores. For the regulatory framework, the issue is in accordance with the SEBI InvIT regulations, and 25% of the offering is reserved for non-institutional investors. The anchor book shall be finalized and paying is on Thursday, 16th April 2026, and the issue is open for public on 17th April 2026, which is Friday, and closes on Tuesday, 21st April 2026.
Thank you for your attention. Thank you for coming here. And we really appreciate your participation and your interest in evaluating this opportunity, Citius TransNet Infrastructure Trust. Thanks to Tejal for the warm introduction. And we look forward to having a very engaging afternoon in discussions with all of you. Over the next 5 or 10 minutes, I just wanted to introduce to you an overview about Citius TransNet Investment Trust, what makes it interesting, what makes it unique, what are its strengths, and leading on to the offering that they just spoke about. And thereafter, we will leave it open for any questions and answers. I want to once again introduce all my senior colleagues on the stage. Moving from the nearest here, this is Tejas, very valued investment bankers for us from Access Capital. Bhavyan Goza is the Chief Investment Officer for Citius TransNet InvIT. So he will be somebody who you will see very actively going forward as the person who will lead up this InvIT. Mrs. Sujaya Mukhepadhyay heads our capital markets and investor relationships at an EAAA level, not just at a CTS level, but at an EAAA level. So she's been instrumental in driving this entire offering for the benefit of investors. And we also have on stage Mr. P. Padmanabhan, CFO for Citius TransNet Investment Trust, and he has been instrumental in being involved in the portfolio's financial and other operations over several years. And we also have in the audience some of our senior colleagues from the EAAA Secura platform. We have Mr. Manish Chitkara on the table over here. He's the CEO for our transport business at the EAAA level. We also have N.K. Upadhyay, another senior colleague of ours from the Secura platform under EAAA, who has been very closely associated with the Western cluster of all of the roads. And he will also be a person who you will see in active role as part of the project manager of the investment trust. So look forward to interacting with you all very collectively over the next couple of hours. I will skip the offer details, Tejas has already mentioned that. So let me speak about some of the uniqueness about the offering and and the key messages that we would like you to take back. First, as Tejas said, Citius TransNet InvIT is a highways and transport focused InvIT. So it's not just highways alone, but also transport sector, which is a very important enabler for the InvIT as other transport sector opportunities in India, they open up. As these models are absorbed and accepted across other transport asset classes such as roadways, private freight terminals, logistics, airports or metro rail, it presents an immense opportunity in the country. The opportunity you will see in the prospectus has been described. It is almost a 42 lakh crore opportunity in the transport infrastructure sector, and roads alone constitute about 33 lakh crores. So this is an enabler, an important enabler to allow the InvIT to access other growth opportunities in this asset class in the future. So this is a very important unique feature for Citius TransNet InvIT. The second aspect is we will speak about in some more detail as we go through the presentation is the quality of the portfolio. And I would request you to appreciate the quality of the portfolio in more than one way. One is the scale, which is very obvious, scale and the size. The initial offering at an adjusted enterprise value basis is 12,000 crores, which makes it one of the largest public InvIT offering. And Citius Transport, I must also remind you all, is a public InvIT. It's not a private listed InvIT, it's a public InvIT. So one of the largest public listed InvIT offerings, 12,000 crore adjusted enterprise value. So that one is scale. The second is diversity. You will see more about it. It's a national geographic spread of the assets across east, north, south and west. That's an important aspect. Third, as I mentioned to you while introducing our colleagues, these assets have been in operation for more than 10 years as you see on the slide. So the toll roads in particular have gone through economic cycles and they have fully stabilized. The competing alternatives to the toll roads are also minimal, as you can see from the traffic reports in the prospectus. So very mature, very stable, long vintage, all the ups and downs and the economic cycles have already played out. So it's a very important aspect for investors to remember. It's not just a large portfolio, it's also a de-risked portfolio that provides safe risk-adjusted returns. And the last aspect is about the quality of the portfolio is also the composition and the quality of the revenue. It is also about the revenue mix between toll and annuity. We will speak about that. It is also about the traffic mix between commercial vehicle and passenger vehicle. Very important to understand the quality behind the numbers, the composition behind the numbers and the breakup behind the numbers of revenue and traffic that provides more stability and more diversification to investors. So those would be the 3 or 4 important aspects for us. I request the investors and all of you to register is about this uniqueness, the strength, the portfolio, the diversity and the quality behind it in terms of the composition. The other aspect to also recognize here is how and in what manner will the InvIT grow going forward. So it's a 21 asset portfolio that is being offered to investors. Out of that, 10 assets are going to be offered upfront at the time of the IPO. And the balance 11 assets will be offered as part of a right of first offer arrangement that the InvIT has with the sponsor group. So what this does, is the InvIT has an immediate path and a visibility to double the portfolio from 10 roads to 21 roads in a certain time frame under the terms and conditions of the right of offer agreement. So this is one aspect of growth that is visible for the InvIT. The second aspect of the growth is what I spoke about earlier, the large transport sector opportunity in the country. 33 lakhs in roads. Roads will be the mainstay for Citius Transport InvIT. 42 lakh crores of opportunity in the transport sector. So taken together, the sector is poised to offer exciting opportunities for different kinds of investor pools, and for Citius also it offers a very interesting opportunity. And finally, the third growth opportunity comes from the way the InvIT in-house team has been set up. The Citius TransNet InvIT will have 350 people in the InvIT ecosystem across the assets, the holding companies, the project manager and the investment manager. These 350 people are very experienced in having been involved in and participated in the growth journey of these assets, and also over the last 10 years of the journey of these roads from construction completion to a stable maturing state that they are. And two of the 350 people who are there in the InvIT that you would speak and interact more are here in the audience today. One is Mr. Padmanabhan and one is N.K. Upadhyay, who is here. So it's an important aspect of our strategy and our vision that the InvIT is packed with substance. The InvIT is packed and staffed with people who have prior experience and knowledge of the assets, so that A, there is continuity, B, we have better control on quality control and outcomes, and C, this will ultimately all translate into delivering on stable, predictable returns, which is a very important requirement for the InvIT. The other aspect I would like to highlight here about Citius TransNet InvIT is again highlighted by Tejas, is this is a financial sponsor-led InvIT. This is not an InvIT backed by any other corporate or construction conglomerate. This is a financial sponsor-led, and the financial sponsor group in this case is EAAA Alternatives. EAAA Alternatives is one of the leading asset managers and fund managers in the country with almost 68,000 crores of assets under management. Our clients at EAAA include diversified domestic and international institutions and large family offices. EAAA has a demonstrated track record of managing third-party capital, servicing this third-party capital, delivering on returns, and in upholding standards of governance and compliances. This experience of EAAA as an experienced fund manager and as a financial sponsor is what will be also available in the InvIT context, given that the sponsor group for Citius TransNet InvIT is a subsidiary, is EAAA group. So, other point I would like to leave also with you is EAAA group, being the sponsor of the InvIT, has also established another InvIT in the energy infrastructure space called Anzen India Energy Infrastructure Trust. This energy InvIT was formed in November 2022, and in a span of about 3.5 years, the AUM of Anzen has tripled. So there is also a track record of the sponsor group in having established and operated InvITs in the past. And all of that experience, including in governance and compliances, will be also reflected in the case of Citius TransNet InvIT. And that is the important aspect of what a financial sponsor-led InvIT brings to the table for investors.
Yeah. What should be the traffic that is flowing on the roads that you are making? One. Secondly, say after you have a lease of 20 years, right? Roads lease. So how are you going to convince your retail investors that their asset is vanished after 20 years unless you go for new roads, right? And is it going to be a regular phenomenon whenever you get a sponsored project, again you are raise the equity?
Very good questions, madam. Thank you for asking that. We will collectively answer that. We will go in some order. I would like all of our senior colleagues to also address your question. On the traffic, maybe I will give a quick idea. As you would see, if I could just take one, Tejas, can you pass the point, that thing to me? Yeah. can we have the presentation up for 1 minute? Yeah. Yeah. Madam, this is a good overview of the traffic for you. As you can see on the left pie chart, there isn't any one economic activity that is contributing traffic to the route. As you can see on the list on the top slide, there are almost like 24-30 industries which are contributing traffic to the route. Again, on the linking to the point you mentioned about retail investors, this is a very important requirement, that the road is de-risked, the road has diverse traffic. The roads are not dependent on any one economic activity. We will have a situation in the country that yes, different sectors go through different cycles. So we have to insulate our portfolio in a manner by building in so much diversity that they withstand minor economic changes that may happen in any one sector. So if you see on the screen, there is courier and parcel, there is construction materials, iron ore, container traffic, as I said, so like for example, Samkhyali Gandhidham, tiles and ceramics, which is Morbi cluster, Rajasthan cluster, okay, agri products, petroleum products, especially Jamnagar, Rajkot, Vadinar, steel and aggregates are more in Orissa and in the Thrissur road in southern part of India. Then you have milk, poultry, machinery, engineering, and now increasingly semiconductors. After the Micron plant comes up near Sanand, semiconductor traffic, automobiles is anyway very strong in that area. No one sector is dominating the traffic flows. The maximum that any sector, as you see on the ring chart, the maximum that any sector contributes is 11%. And so this is across 10 asset portfolios. So this is one important aspect I'm trying to address both your concern on how retail investors should draw comfort. So this stability, and we have seen it play out over the last number of years. And you can see again on this slide, madam, because of the diversity and the mix of the traffic and the commodities that are flowing on these roads, the last 7 years, in the last 7 years, the traffic has consistently grown on a blended basis at 6.5%. And in the last 3 years, traffic has been stronger at 7.1%. So this is showing you, a 7-year means it has gone through COVID, there is a full cycle that it has gone through, and the roads have registered 6.5. One of the important reasons, there are several, but one of the important reasons for this kind of strong traffic growth is because there is diversity in these roads. The roads grow, maybe one economic sector has one initial hiccup, but then there are other sectors that continue to do well, and therefore one balances the other. The last point here, which is again a matter of comfort for you and retail investors and all the investors, is the quality of the revenue and the quality of the traffic. As I have emphasized in the earlier part of the discussion, 62% of the traffic is commercial traffic and 38% is passenger traffic. Commercial traffic is long distance, sticky. They don't change their routes. Long distance traffic, let's say Delhi to Kandla, suddenly they don't take decisions to say we will go via Gwalior to Kandla. It doesn't happen no matter how good the expressways and the networks they realign. So it's an important matter that gives both stability and predictability that 62% is commercial traffic. And in revenue terms, this translates into 3/4 of the revenue, 74% revenue being commercial revenue and the balance being passenger car related revenue. This resilience is very important, and this resilience of 62 and 74 is directly an outcome of the industrial diversity on these roads. If you were to compare this with a city road will be 80% passenger, 20% commercial. There is a potential that city traffic, the dynamics are very different. There's a different degree of volatility, whereas the commercial traffic long distance remains very stable. And I would like you to also note here the traffic growth in the last 7 years of 6.5%. and 7% in the last 3 years. Taken together to address the question that you mentioned about retail investors' comfort is what I reiterated from the beginning, is it's a scaled, resilient, robust, diversified, de-risked portfolio because of some of these reasons. As regards the future growth, where the new additions will happen, again to draw comfort, I will request Sujay and Bhavyan to please update.
Good afternoon. So our toll assets have an average life of around 13.5 years, almost 13 years, sorry. This is on the back of almost 10 years of operating history. You are right, most of the assets concessions have a 20 to 25 year life. And as over a period of time, essentially some of these assets will start dropping out. And what InvITs usually would do is keep acquiring assets. So the benefit that we are starting off is that we have the 10 asset portfolio, which is pretty long, about 13 years average life. We have a visibility on the ROFO pipeline assets, which is all the hybrid annuity. There is 11 assets. So that is more number of assets that is visible to us than we are basically having at the formation transaction. So the InvIT will keep acquiring assets from time to time. There is a very large opportunity that is available in the road space and in the adjacent infrastructure segments that we can have.
Just to further add to what Bhavyam is saying, I think we have to also address your question on whether sponsor will be raising capital, right? One, obviously we have ROFO. Second, as you saw when Shri presented, we have 350 odd people sitting in the InvIT. So while sponsor will support the growth of the InvIT on its own also can do third-party acquisition. Whether sponsor would raise equity, yes, sponsor would be raising equity for acquisition, but however, as you may be aware, InvIT regulation allows InvIT to raise up to 70% of the AUM from debt. Our initial, after formation, we are not going to hit beyond 49, so we will have headroom to do acquisition through debt. The best mix for any acquisition would be a good mix of equity as well as debt. So what would be the exact mix? It depends on when the acquisition happens, what are the market dynamics in terms of interest, cost, etc., etc. But yes, it would be mix, and sponsor will come to the market to raise capital. Secondly, on your life related question of the assets, Shri also emphasized we already have one InvIT which is listed, while it is private listed. Over the last 3 years, there has been acquisition. So InvIT has to survive on acquisition. That's the main thumb rule for any InvIT to grow.